following is a Silber Bullion television audiocast.
Hello again, everyone, and welcome to another edition of Silber Bullion Television, SBTV. I'm your host, Patrick Vieira. Today, we have with us Ronald Stöferle, a managing partner of Incrementum AG, an independent investment and asset management company based in Liechtenstein. A proponent of Austrian economics, Ronald co-authors the well-known In Gold We Trust report with Mark Wallach, which has become one of the benchmark publications on gold, money, and inflation. And we are delighted to have him here today as a return guest. Good day, Ronald, and welcome back to SBTV. How are you doing?
Hi, Patrick. Thanks for having me again, and Happy New Year to you and all your listeners.
Thank you. Happy New Year to you and all your fans out there as well. We're glad you accepted an invitation to come back. Yeah, Ronald, you spoke recently at the China International Precious Metals Annual Conference in Shanghai. Can you share with us your experience with the attitudes towards gold, and what was your main takeaway from the conference?
Well, the conference was fantastic. I think one of the main takeaways for me as a European was that first of all, Chinese really know and love their gold. They've got a different time preference. I think they regard it more as a monetary unit, as a currency than Western investors sometimes do, that more regard it as a commodity. I talked to many people, officials, people from the banking industry, from the investing side, and everybody is, I would say, slightly positive on the outlook. But it seems that, the real estate market for Chinese investors still is much more important. Of course, we talked quite a lot about the trade wars. It seems that the honeymoon between China and the US is over, but we won't see a divorce yet. And I kind of felt that the Chinese know that they've got a kind of a longer breath, and that their cards that they have been dealt with, that they're pretty good, and that the U.S. basically desperately needs the Chinese economy, and they are still very much intertwined. Ferguson coined the term Chimerica, so the combination of China and America, and I think that's far from being over, and I clearly expect some major developments regarding the trade war in the next couple of weeks. Another important insight from my point of view was that it seems that the Chinese economy is struggling at the moment. We're seeing that when it comes to official Chinese numbers. We have seen that industrial production, for example, was really weak. We are seeing that monetary growth is pretty weak, and we're also seeing from, I would say, kind of China proxies like the Australian dollar, also the Australian housing market. We're seeing it in commodity markets, especially industrial markets, that Chinese demand is pretty weak. So that's absolutely certain. But, and that's, I think, one of the main drivers in 2019, the Chinese are already doing this monetary U-turn. So we have seen that the reserve requirements were lowered a couple of times already, and that the China Finance Ministry just announced some fiscal stimulus. So tax rates on individuals and corporations, as well as VAT, will be cut. The ministry is even considering ways to reduce social security fees and to lessen pressures on small companies. There was just some announcement about railway lines, that they will increase and push infrastructure spending. So it seems that there's really something going on, I think, on a monetary but also on a fiscal side, and I really expect this to have an effect within the next couple of months. So all in all, I think China is on a pretty good path. It is absolutely certain that China holds significantly more gold than officially announced. I think that's some sort of an open secret, and I think that the de-dollarization that we're writing about for a couple of years now, that this is clearly happening.
You said something pretty interesting where you said it's the honeymoon's over, basically, between China and the U.S. Do you think one country needs the other more, or do you think it's a pretty equal relationship where they both need each other?
Well, I think they both need each other, but we can clearly see that the trend growth in China is moving lower, but that's clear because China is on the cusp from emerging market to an industrialized nation. So it is pretty obvious that the whole economy is transforming rapidly, and that China is picking up is picking up a pace when it comes to internal consumption and trying to be less dependent on exports. It is clearly obvious that many manufacturing jobs are not being done in China anymore, but rather in Vietnam or in Cambodia, for example. It is clear that the Chinese consumption is becoming more and more of a factor for international companies as well. Just have a look at, I don't know, the numbers from all these luxury brands like Louis Vuitton, Gucci, whatever. If you talk to people working there, they will all say that Chinese demand is the most important demand wherever you go, all over the world. There are mostly Chinese employees because people know, for example, in Vienna, in my hometown, if you go to this Louis Vuitton store, people will tell you that most of the turnover is already done by Chinese, which is a great factor, and we're seeing that tourism. So Chinese tourists traveling the world. That's clearly a sign of growing wealth and kind of the next stage of the Chinese success story. So I think, for those listening to all the gloomy economic news out of China, I think we should consider the broader picture. Beginning 1978, led by Deng Xiaoping, China has been moving in a steady 3 steps forward, 1 step back kind of trend. And I think at some point it seems that China is actually more capitalistic than some Western countries, where, for example, more than 50% of the GDP is being produced by the government. So therefore, I think it's truth is most of the time somewhere in the middle. In Austria, we say that the golden middle, and it seems that it's right for China as well. So I think for everybody is criticizing China about the politics and also monetary politics, I think having the boots on the ground, as always, really paints a kind of different picture.
I understand what you're saying. Last year we had taken a trip to the Grand Canyon, and I was pretty surprised to see that in these little lunch wagons, these lunch trucks, they had Chinese meals, dumplings and noodles, things like that.
Yeah.
And I was pretty amazed to see this all the way over in the Grand Canyon. China, it does seem to have a dangerous dollar debt addiction with the start of 2019. And in 2018, In Gold We Trust report, I believe you refer to China as the sword of Damocles. Can you
Yeah.
share with us your assessment of the Chinese economy given its rapidly rising foreign debt and potential bubbles in the economy?
Yes, of course. I mean, what we've been criticizing in the last report was, of course, that Chinese monetary policy was extremely aggressive, and for now, the balance sheet of the People's Bank of China is already the biggest balance sheet in the whole world. So we have said that actually the 2009 rescue program by the People's Bank of China and also the government was actually much more aggressive than the measures that were taken by Western central banks and Western politicians. So that is definitely a point of concern. Of course, also the Chinese banking system doesn't really look extremely stable at the moment. However, I think that what we have seen in the last couple of quarters, that credit growth was actually kind of cooling down, and we have seen that less financial leverage was taken by many companies. I think there was some sort of a healthy development that we have seen quite recently. One of my main concerns regarding China is something that we're facing in the Western world as well. It's demography. So the demographic development in China is definitely a big concern. We have seen Auguste Comte. He said that demography is destiny, and I think that really might become an issue because the percentage of people in the working age is shrinking dramatically. At the moment, it's 900 million people, but in 2030, it should be 830 million, and then in 2050, it's only 700 million. So, of course, one should always be very cautious with those very long-term developments. But it seems that the demographic development is definitely something that we should be considering. All in all, I would say that China is facing major issues at the moment, but at least for the shorter term, I think they've managed or tried to avoid a crisis pretty well. And as I've said, this monetary but also this fiscal stimulus that we're seeing, and from my point of view, Western central banks are already at the beginning stage of this monetary U-turn, especially the Federal Reserve. But I think this monetary U-turn that we have seen by the Chinese, this will be one of the major drivers in 2019.
Going forward and going ahead, how real do you think the Chinese ambitions to have its currency, the yuan, become a reserve currency? How real do you think this is, and is it practical to expect that the yuan can be a potential candidate for the reserve currency, given that it is still not fully convertible like the dollar at this moment?
Well, studying the world reserve currency, that's something that we enjoy pretty much, and I think this de-dollarization topic that we're writing about for a while already, many people forget that this is a very, very long-term topic. Zero hedge, they wrote, the Petrol Yuan represents the intersection of a dying petrodollar and an ascendant renminbi. Mm-hmm. That's true. It is true. And we have seen quite recently many comments on actually the dollar being the reserve currency, and that it might be replaced. Vladimir Putin, he said, we should move away from the excessive monopoly of the dollar as the only global reserve currency. Jean-Claude Juncker, he said that 80% of the European energy imports, that is 300 billion euros, that 80% are actually paid in US dollar terms, while only 2% of those imports are coming from the United States. So I think this de-dollarization, that's a long process. It is picking up momentum at the moment, but people tend to forget that when it comes to the numbers at the moment, still 62% of all currency reserves are in US dollar terms, right. 20% in euro terms, renminbi 2%. Yeah. When it comes to global trade, 60% in US dollars. When it comes to foreign exchange trade, 88% in US dollar terms. And I think, we should not forget this kind of network effect. The dollar is still by far the most liquid capital market in the world. The U.S. Treasury market, but also the, let's say, sophistication of the banking system and liquidity providers is just significantly higher than for the European market, also for the UK market, for the Japanese market, and especially in comparison to the Chinese market. So this network effect is something that will work for the next couple of years. We all know that Facebook and WhatsApp are basically not the most the best or the most successful technologies, that there's services or apps or whatever that are significantly better, but still it has by far the biggest network, so it makes sense to kind of stay on in that network, and at some point that's gonna break. But for the dollar, I think this network effect is important. And of course, we should not forget the military and the military capacity by the U.S. dollar or the U.S. government, which kind of, let's say, protects this reserve currency status. Barry Eichengreen, he wrote a pretty interesting book. I think it's called How Global Currencies Work, Past, Present, and Future. And the book basically teaches that once the necessary prerequisites are met, a currency can rise to global significance pretty quickly. So the US dollar's position may look secure for now, but there is definitely no guarantee that the US currency will retain its top slot in the longer term. Mm-hmm. But Eichengreen also says that, for example, at the end of the 19th century, the US already outpaced or already was bigger than the British economy. But it still took basically 44 more years until the end of the Second World War, Bretton Woods Agreement, until the US dollar became the world leading currency and not the pound sterling anymore. So what I want to tell you is it takes a long time. There's massive developments happening at the moment. We're always writing about that in our In Gold We Trust report. For example, the Shanghai Oil Exchange, which has already a market share of 14% in the oil market, which is by far the biggest commodity traded. That's a very, very big sign. We're seeing basically on a daily basis agreements, bilateral agreements between emerging markets, not settling their trade in dollar terms anymore. We have seen that, for example, China's non-commodity goods trade surplus is $700 billion US, which means if China can print Chinese yuan for commodities. So if the Chinese yuan contract works actually, and it seems to work, then China will likely not have a balance of payments driven currency crisis for a long time. But the pressure on the US balance of payments will rise rapidly. So I think it's definitely one of the most important topics to follow at the moment from an economic point of view, but also from a geopolitical point of view. But we should not forget that this is a long-term process. So many people, I think, overestimate the short or medium-term effects on financial markets.
Yeah, I mean, we could stay on China forever. Political, geopolitical, military, technologically. I mean, it's a fascinating country that it is an important player on the world stage. And for our subscribers, Ronald's 2018 in Gold We Trust report has a fascinating full chapter dedicated to China, looking into the current rule under President Xi and how the country will tackle trade with U.S. and its increasing indebtedness. So look for the link to the report in the video description below. The 2018 In Gold We Trust report had a section devoted to the topic of de-dollarization. Just for the benefit of our listeners who are new to this subject, can you explain what de-dollarization means?
De-dollarization is basically the status of the US dollar as the world's reserve currency, that this status is questioned and also that, as we've said before, that many countries are trying to circumvent the US dollar when it comes to international trade, when it comes to reserve currencies and so on. But as I've said before, that's a really long-term process. I think that gold is playing a major role when it comes to the de-dollarization process. I think that actually it is no coincidence that most of the emerging markets, or I think Jim Ricketts, our advisory board member, he said the axis of gold, so meaning Russia, China, also Iran, Turkey, those countries are buying gold on a very, very large scale. It's a huge driver, but it's not only those countries. It's also, for example, Hungary or Poland last year announced for the first time that their central banks are buying gold. So I think that central bankers all over the globe, they kind of realize that it makes sense to diversify out of the dollar. And I think it's also interesting that actually, and that's also something that Ricketts said, if it's not money, then why does the US have 8,000 tons of gold? Why does the IMF hold 3,000 tons of gold? Why does the Eurozone hold more than 10,000 tons of gold? So I think the major players, they know that gold is important as some sort of the monetary DNA of their fiat currencies, and from my point of view, at some point there will be a next crisis, yeah. And if you study crises, every time they got bigger and more global, and of course interest rates were lowered more significantly, and the measures taken by central banks were more aggressive. So from my point of view, the next crisis will probably not be a financial crisis. It will be a crisis of our monetary system. Yeah. And if you study financial history, then it's pretty obvious that in such periods when the global monetary regime was in question, gold always played a major role. So we cannot rule out that there will be actually a remonetization of gold or a revaluation of gold.
The Petrol dollar and the Petrol Yuan. How likely do you think Saudi Arabia, in their negotiations with China, will eventually accept the yuan as payment for oil, and what impact would such a development have on the world should it happen? Those of us who follow the petrodollar, we know that it was born where the U.S. would basically protect Saudi Arabia in exchange for Saudi Arabia getting their allies to sell oil only in dollars. So if this should happen where Saudi Arabia takes oil payments in yuan, what kind of impact would this have?
Well, what was the first trip, trip abroad by Donald Trump? Where did he go to? Do you know it?
Yeah, he went to go and put his hands on that little laser crystal ball thing, right?
Yeah, he went to Saudi Arabia.
Yes.
So I think that is no coincidence.
Yeah.
I think the Americans clearly see that Saudi Arabia is kind of considering pricing their oil exports not in US dollar terms anymore. But I think this is, what we've seen recently with this whole Khashoggi story, this brutal murderer and the reactions. I think that Donald Trump is a bit concerned about that. But this is also much more of a longer term project. I think that if you follow the Chinese yuan oil contract, it is clearly working, as I've said before, with both the front month volume and also open interest. They are gaining share. Yeah, they are becoming more and more important, and I think nobody in the industry would have expected that Shanghai oil contracts that were only introduced last year in spring, that they would become such a major force and such a major market player within such a short time frame. So I think the Chinese oil contract is clearly underappreciated, and it's not. It's not just a critical pivot point for oil markets, but also for foreign exchange markets. I think that will be something that we should follow very, very closely, the Chinese oil contract, and also every kind of news bit telling us more about the relationship between Saudi Arabia and China. This is something that's going to get really important. But again, those are also very long-term developments, and I wouldn't expect that the Saudis would just say, okay, well, folks, the era of the petrodollar is over. We are now settling all our oil exports in yuan terms. If that's going to happen, then probably all hell will break loose.
I would have to agree with you there. I can't even imagine where things would go with it, but none of it looks good. What also didn't look quite good, but not to the impact of a Petrol one, is the tumultuous year for precious metals back in 2018. Many of us started the year expecting gold's good run from 2017 to continue, only to see prices go lower towards the end of the second quarter. And gold, it's since caught a bid before the year ended. So I'm curious, Ronald, what's your outlook for gold in 2019?
I think if we look back a bit, we should not forget that 2017 was a great year for gold. Gold was up 13.6% in dollar terms. 2018, definitely, I think that the dollar strength was one of the major drivers last year for all asset classes. I just attended a big evening, a big invitation from a private bank, where they introduced their clients from the wealth management side.
Did they feed you Big Macs and Wendy's like the Trump dinner for that football team?
No, the food was excellent, but it seems of course they also said, okay, there were private banks that are in the business for decades, and they said 2018 was an extremely challenging year because it was not only equities but also bonds being down. It was commodity markets being down. Most of the alternative investments, CTAs, hedge funds, they were all down. So 2018 was a brutal year. Gold last year in dollar terms was down 2.1%. And that's maybe a bit disappointing. In Australian dollar terms, it was up 8.5%. Actually, gold in Australian dollar terms is basically at its all-time high. Canadian dollars, it was up 6.3%. Swiss francs, it was up. Chinese yuan, it was up almost 4%. In euro terms, it was up 3%, which is, I mean, a gazillion times higher than what you would get on your savings account. So actually, I think this divergence between the sentiment and actual performance, this is something that's really positive, because everybody thinks that gold is kind of dead.
Yeah.
But actually, gold is holding up pretty well. And from my point of view, 2019 will be the year when we move from the first stage of a trend based on the Dow theory, which is the accumulation phase, to the second stage, which is the public participation phase. So we're seeing that some big banks are raising their price targets. Of course, there was even Goldman Sachs raising their price target quite recently. We're seeing that many institutional players, they are still on the sidelines, but they want to enter gold. And I think gold will play a major role for their asset allocations in the next couple of quarters. And it seems that as soon as we take out this massive resistance at 1350 to 1370, I think that there will be huge momentum kicking in. And then basically there's room up to 1500, 1530. I think that gold will pick up really steam. And as you know, based on the Dow theory, this public participation phase is the longest phase, and it's the most rewarding phase. And then the last stage is the distribution phase. We're still far away from that, but I remember 2011 when I woke up in the morning and I saw gold was actually $100 higher. I mean, $100 in one day, and we are far away from that. But it will happen, of course. And the main driver, as I've said before, is this monetary U-turn that we're seeing, especially by the Federal Reserve.
Let's talk about something a little bit more fun. In 2018, in Gold We Trust report had an interesting section talking about the gold Oktoberfest beer ratio. Can you share with us how this interesting ratio came about and what it shows?
Of course. Well, as you know, in Gold We Trust reports, we always try to show that gold over the long term preserves and secures your purchasing power. I think that's what gold is really about. I don't think that people should expect to for the short term to make a big fortune investing in gold. It is really for a long term, perhaps a generational preservation of wealth and capital. That's I think really crucial. So in our gold reports, we always come up with long-term comparisons of prices in fiat money in US dollar terms, but also in gold terms. We've had that with admission tickets to Disneyland. We've had that with Hershey chocolate bars, with Volkswagen cars. We've had that with, the long-term comparisons, loaves of bread, for example. We've had that as a very, very long-term comparison. And we started doing that for the Oktoberfest in Munich a couple of years ago. And it seems that, the correlation between gold bucks and beer drinkers is pretty high, because that's always our most popular chart. Everybody likes that. the way we show the purchasing power of 1 ounce of gold at the Munich Oktoberfest. So what does it mean? The price of 1 mass, which is those big mugs at the Oktoberfest, 1 liter of beer, since 1950, it rose on average at 3.9%. So this is the inflation at the Oktoberfest. Now, measured not in fiat money, but in gold terms, you can see that your purchasing power is actually pretty stable. So last year you could buy with 1 ounce of gold, you could buy 93 mass of beer, which is basically at the very long-term average. The average over the last 70 years was 89 mass per ounce. So actually that also kind of shows you that we're far away from this euphoria stage. In 1980, for example, you could have bought 227 mass with 1 ounce. And it shows you that over the really long term, gold really preserves your purchasing power, not only when it comes to goods in financial markets. We have done the same with purchasing power measured in oil, for example, but also measured in goods that you basically daily use. And I think those comparisons are really important, because our readers sometimes they get confused with all those terms like quantitative easing. What is it really? TLTRO. What is it really? Although the numbers that are now trillions already. Those numbers, they're hard to grasp, and therefore I think it's important to come up with such comparisons and such charts from the daily lives, because that clearly shows you that the steady loss of purchasing power of the euro, of the dollar, whatsoever, is clearly visible, while gold has not lost any purchasing power in the past decades, despite some fluctuations. So yeah, that's something that's really, really important for us. And I think you can expect some more of those charts in the upcoming In Gold We Trust report.
It's great. I look forward to those. In fact, I think I'll let my wife know I'm going out tonight to test the purchasing power of gold down at the pub. So, but before we wrap up, can you let our listeners know more about the In Gold We Trust report? And can you share with us any new developments or plans at Incrementum AG for 2019?
Of course. The new In Gold We Trust report will be published end of May again. I'm sure that we will have perhaps an interview, or we can make the report available for your listeners and your clients. We are already very excited that for the first year we will also publish a Chinese version, so there will be a Mandarin translation of the In Gold We Trust. This is a really major step for us, because I think it's really important to deliver our thoughts and our information in the Chinese market as well. So that's really something that we're very excited about. We will publish a new chart book on gold beginning of March. I'm in the process of publishing my new book, which is called The Zero Interest Rate Trap. Besides that, we have just published our new crypto research report. So right. We build a fantastic team analyzing the crypto market as well. And this is a quarterly report that is published by Demelza Hayes and Mark Walek. And on the investment side, we are also very active, coming up with fantastic new products. You can have a look at our webpage, which is incrementum.li. You can download our reports totally for free on ingoldwetrust.report. And actually, this is something that we're about to to publish today. We've got the our incrementum inflation signal, and it showed us falling inflation, so deflationary pressure the last couple of months, and quite recently, last week, end of last week, it moved to a rising inflation signal, which should provide a pretty good environment for inflation-sensitive assets like mining stocks, but also commodity currencies, commodity producers. And I think that this move in our inflation signal that we wouldn't have expected, actually, this kind of discounts already the steps that are taken by the Chinese. So this fiscal and monetary stimulus, this monetary U-turn that we're already seeing by the Chinese, I think this is the big driver for the commodity markets going forward, and therefore from the investment side, it makes you really excited, because I think we're seeing some good moves in many commodity markets. We have seen that M&A was picking up not only with Barrick and Randgold, but now quite recently with Newmont and Goldcorp, something that basically nobody expected. So this is a clear sign that there's definitely something going on in the mining space, and especially in the gold mining space. And yeah, I think it's that should be one of the sectors that will put a smile on our faces in 2019.
We're going to definitely put the link up, and again, for listeners out there, you can go to this link and you can download the In Gold We Trust report, and it is a very, very interesting read. Ronald, we thank you again for coming on the show, and it's been a definite pleasure once again speaking with you. Give our best to Mark and the Melza. We appreciate the work that they do as well.
Absolutely. Thank you very much, Patrick. It's been a great pleasure as always, and I really enjoyed it, and I hope that you and your listeners enjoyed as well. So thank you very, very much.
Ronald, I'm going to try this again. Stoferle.
That was almost perfect.
Almost. Yeah. Oh, darn it. I was practicing the whole week.
Perhaps you can practice in the pub tonight again. After 1 or 2 beers, it's often a bit easier. So it's Stöferle if you really want to pronounce it like. But it's tough, yeah.
I'll get it later. I'm Stöferle. Okay, I'll get it. That was Ronald Stoferle from Incrementum AG and the author of In Gold We Trust report. For more of his insights on precious metals and the global economy, please visit his website at www.incrementum.li. If you like this video, please hit the like button and subscribe to the SBTV channel to be updated on new content, and find us on iTunes and Spotify.